Also ein herzliches Willkommen an die Präsidentin der Europäischen Zentralbank, Madame Lagarde, mit ihrem Team. Und dann darf ich jetzt Rasmus ANDRESEN als Berichterstatter das Wort erteilen.
Vielen Dank. Dear colleagues, President Lagarde, it's good to see you here in the European Parliament. The Russian aggression against Ukraine, disrupted supply chains and the ongoing climate crisis are threats to our economy and to price stability. With an unstable economic outlook, we can't be sure that price stability and an economic stable environment for all citizens will be reached. Energy and food prices are still far too high, and our dependence on fossil fuels remain far too strong. While profits of the biggest corporations are skyrocketing, a majority of citizens are suffering from real wage losses. The real wage growth declined in the first half of 2022 to minus 2.3%. In Germany, my country, the wage loss went to minus 3.9%. At the same time, we could observe a higher contribution of profits to inflation, for example, from energy companies like ExxonMobil, Shell, and others. We need to have a science-based analysis. We therefore call on the ECB in the report to begin to report also on profits contribution to inflation, same as you are already doing with wages. We are calling on the ECB to take a step-by-step approach. The high inflation is a big concern for the European Parliament, and we agree on that the ECB has the tools to bring demand-driven inflation down. By accepting the primary mandate, we also need to be very clear. This current price explosion is different. The ECB has limited tools to address it. We are facing exceptional supply shocks in the energy markets. The ECB cannot bring this inflation down at short-term level, but also needs to focus on the medium-term perspective. Our high levels of dependence on Russian imports and skyrocketing prices for fossil fuels are an important reminder how a climate-harming policy is also directly affecting price stability. Green monetary policy is not a nice-to-have, but necessary to secure price stability and a prosperous economic outlook. This is why we dedicated an entire section in the report to the ECB's policies to actions against climate change. We are welcoming the ECB climate roadmap and stress test you put forward last year. We discussed it in the committee more than once, but we also think that we need to do more, and we need to include climate and environment-related risks through climate stress tests and also other tools. And we are inviting you, President, also in the next months to discuss this further with the European Parliament. Climate change is affecting price stability, and ignoring this fact will lead to big problems in the future. From a green perspective, important first steps had been taken also in the report we could agree on in the committee, but we still need to develop tools so that needed green investments will not be harmed by a tightening of monetary policy, and I guess this will also be one of our major priorities for the next debates in our committee when it comes to central banking and to monetary policy. For the first time, the report also includes a chapter with recommendation for secondary objectives. For too long time, the secondary objectives politically had been ignored. And let me state this in no uncertain terms. The ECB secondary mandate is legally binding and laid down in the treaties. So we are calling the ECB to explain in a designated chapter of its report how its monetary policy is affecting the general economic policies of the Union, including impacts on sustainable growth and employment or inequality. Dear colleagues, the ECB is accountable to the European Parliament, and I really think we have a strong mandate and an important work by calling the ECB to be more transparent and to explain much more on their monetary decision-making. So this report is a chance to go in the next steps in a dialogue together with President Lagarde and the ECB, and I'm really looking forward also to do this after hopefully a strong vote tomorrow and the debate here tonight. So once again, thanks for the President to attending the meeting, and I'm really looking forward to all of your contributions. Thank you.
Herzlichen Dank. Dann darf ich jetzt für die Europäische Zentralbank der Präsidentin Christine Lagarde das Wort erteilen.
Madam President, Madam Commissioner McGuinness, honourable members of the European Parliament, I'm very pleased at this point in time during the day to be in front of you and to share this moment and to participate in today's important debate, as has just been indicated by Mr. Rapporteur. The ECB was granted a democratic mandate to ensure price stability in the euro area. In other words, we safeguard one of the fundamental conditions for stable economic growth. To achieve this mandate, the ECB was also granted a high level of independence. And as you acknowledge in the draft resolution we are discussing today, the ECB's ability to take all necessary measures free from any political interference is essential to deliver on its mandate. And this is particularly the case at the moment, given the present circumstances. High inflation continues to have a large impact on all areas of our economy and on people's everyday life, especially low-income households, as you also noted. And this is why the Governing Council has started normalization of its monetary policy back in December 2021 and has raised the ECB interest rates by 300 basis points since July 22. It has recently, at its February meeting a few days ago, emphasized its determination to stay the course in raising interest rates significantly, at a steady pace, and in keeping them at levels that are sufficiently restrictive to ensure a timely return of inflation to our 2% medium-term target. But independence comes also with a great deal of responsibility. The choices that we make as central bankers have a significant influence on society. So being accountable for our decisions is the necessary counterweight to our independence. This means that we need to explain our policies and the analysis that underpins them to ensure that people understand how and why our decisions are taken. But it also means that we must be attentive to the concerns of the public and carefully evaluate whether and how we can respond to these concerns within our mandate. After all, reinforcing trust in our institution also supports our monetary policy, for example, by anchoring inflation expectations. Today's debate on your draft resolution is crucial in both these aspects. So I'm here today to explain our policy, but also to listen to your views as elected representatives of the European citizens and to further reflect on how the ECB can act for the benefit of all Europeans within its mandate. Let me start by briefly outlining our assessment of the euro area economy as was discussed by the Governing Council earlier this month. Euro area growth slowed but didn't stall in the fourth quarter of 2022. The outcome was better than was initially expected, as the adverse economic effects from Russia's unjustified war were partly buffered by improving supply conditions and fiscal support related to the energy crisis. While confidence is rising and energy prices have fallen, we expect activity to remain weak in the near term. According to Eurostat flash estimate, and this number, by the way, is calculated using an estimate for the German inflation at this point in time, inflation was 8.5% in January. It is likely to be revised slightly upwards when taking into account the German inflation numbers which have now been published. The decrease compared with December was mainly due to a sharp drop in energy prices. At the same time, the prior surge of energy prices and other input costs is still feeding through to consumer prices. Overall, price pressures remain strong, and underlying inflation is still high. If, for instance, you exclude energy and food, inflation remains at 5.2% in January, the same as in December. Looking at the labour market, wages are growing faster, supported by robust employment dynamics, with the main theme in wage negotiations becoming how wages can to some extent catch up with high inflation. And even though most measures of longer-term inflation expectations currently stand at around 2%, these measures warrant constant and continued monitoring. The risk to the growth outlook are now balanced, or rather more balanced than they were in December. Russia's war against Ukraine and its people continues to be a significant downside risk. But a faster resolution of the energy shock would support growth. The risks to the inflation outlook have also become more balanced, especially in the near term. So, against this economic backdrop that I have summarized very briefly for you, what is our monetary policy? Well, at our latest meeting on February the 2nd, a few days ago, we decided to raise the key ECB interest rates by 50 basis points, and we expect to raise them further. So, in view of the underlying inflation pressures, we intend to raise interest rates by another 50 basis points at our next meeting in March. And we will then evaluate the subsequent path of our monetary policy. Keeping interest rates at restrictive levels will over time reduce inflation by dampening demand and will also guard against the risk of a persistent upward shift in inflation expectations. Our future policy rate decisions will continue to be data dependent and will follow a meeting-by-meeting approach. At our February meeting, we also decided on the modalities for reducing the size of the Eurosystem balance sheet under the asset purchase programme that I will call the APP for simplification purposes. As we communicated in December, the APP portfolio will decline at a measured and predictable pace, with the decline amounting to 15 billion euros per month on average from the beginning of March until the end of June 2023. And it will then subsequently be determined over time. In the interest of simplicity and neutrality, the parameters for reducing the APP portfolio will be closely in line with what we have done previously. This will preserve consistency with our monetary policy stance, which is being set primarily by our interest rates. For the Eurosystem's corporate bond purchases, reinvestments will be tilted more strongly towards issuers with a better climate performance, supporting the gradual decarbonisation of our corporate bond holdings in line with the goals of the Paris Agreement, without prejudice to our price stability objective. Let me now turn to other important matters you have raised in your draft resolution, namely the expansion of the euro area and the work we must do to complete our economic and monetary union. On January the 1st, we welcomed Croatia to the euro area, expanding our club from 19 to 20 countries. Croatia's accession is an impressive achievement, not only for Croatia itself, but also for the euro. It shows that the euro is an attractive currency and once again reminds us that in Europe we are just stronger together. Adopting the euro will bring tangible benefits to Croatia's 4 million citizens, building on the broader positive impact the euro has had over the last 2 decades. As an anchor of stability, the euro has advanced European integration and strengthened the single market's role in driving growth. And this, in turn, has elevated the EU's standing as the world's largest trading bloc and enhanced our autonomy on the global stage. The euro has also become a symbol and a binding symbol and integral part of our shared European identity, as its popularity shows. Support for the euro and for economic and monetary union has now reached an all-time 80%, 80. But with rising geopolitical tensions in the global economy, a stable euro will become even more important in ensuring that Europe continues to thrive. And for that to happen, we need to collectively double down on the work that remains to complete our economic and monetary union. And on that, each and every European policymaker needs to contribute. Let me mention briefly, by way of conclusion, the 3 areas where progress can be made in the next 12 months before the EU elections in 2024, which I know is already keeping many of you busy. But there is work to be done before that. Let me mention those 3 areas. Number 1, euro area financial integration. Number 2, EU economic governance. Number 3, the digital euro. Big projects. If we look first at strengthening the euro area financial integration, the ECB is playing its part, notably by ensuring European banking supervision that is effective and consistent. And we promote financial integration through our central bank services, for example, by supporting EU debt securities to fund the Next Generation EU programme. But the future of EU capital markets hinges on the broader regulatory environment, which is in your hands. Deeper, more integrated EU capital markets are essential for enhancing risk sharing and mobilizing the private financing needed, especially for the green and digital transition. And I know that work is underway, and that the Commission is playing its part, and the Econ Committee is also active in that respect. But more needs to be done. It is critically important if we want capital to flow and to feed the ambitions that you have and that we legitimately have in relation to our green transition and digital mutation. Now, by the same token, we must not overlook the crucial work remaining for the completion of the banking union, an issue highlighted in your draft resolution and on which this Parliament has been vocal in pushing for progress. Second, the reform of the EU economic governance framework. The ECB has highlighted and has gone public in that respect the importance of a simpler and more predictable framework, stronger national ownership and sustained implementation. I really encourage policymakers, including this Parliament in particular, to rapidly reach a viable and broadly shared agreement that strengthens the foundations of our economic and monetary union. Third, digital euro. An appropriate regulatory framework needs to be laid down. The digital euro project is a truly European initiative which is moving ahead at a steady pace. In the autumn, the ECB's investigation phase will come to an end, and the Governing Council may well decide on the next steps. But let me be clear. That does not mean that we will then issue the digital euro. That would only happen at a later stage, based on a dedicated decision and only after the Parliament and the Council of the EU have adopted the legislative act. As EU policymakers, all the EU policymakers should continue playing their part, and I'm really counting on you as the European Parliament to swiftly start working on the legislative proposal which the European Commission has been working hard on and intends to present in a few months. So let me conclude at this point. We are committed to bringing inflation back to our 2% medium-term target in line with our mandate, and we will take the necessary measures to do so. As Thomas Jefferson once wrote, the price of freedom is eternal vigilance. In a democratic society, central bank independence can only be legitimate if it is founded on a clear mandate and balanced with accountability to ensure that the central bank follows and respects its mandate. This also means that forceful efforts to ensure price stability need to be accompanied by equally forceful democratic scrutiny. And in this spirit, we will continue our ongoing dialogue with you as the representatives of the EU citizens. As also advocated in your draft resolution, the ECB stands ready to agree on a formalization in writing of the accountability practices between the ECB and the European Parliament. The ECB has made a proposal to the European Parliament and looks forward to finalising an agreement between our two institutions. At this point of my conclusion, I would like to recognise the President of the Econ Committee, Mrs. Irene Tinagli, without whom progress would not have taken place. The entire Econ Committee has been a great partner in the work that we do together, but without her, wouldn't have moved. So, thank you. And thank you to you all for your attention. I'm now looking forward to listening, and if more explanation is needed, of course, I'll come back at the end of this debate. Thank you for your attention.
Thank you very much, Madam President.
Thank you very much, Madam President, and thank you to all members of this Parliament for addressing questions to me and for explaining their concerns or the perspectives from which they're coming from. And I would like on this occasion to thank Mr. Andresen and his colleagues for the work that they've done and for the seriousness with which they did their work in coming to the ECB, visiting with us, and really going deeply into some of the issues that he has commented upon. So what I would like to do is focus my response on three key points which have been debated by many of you. And I apologize to those who had specific questions, but I think in the time that is imparted to me, I think I will not do justice to their curiosity if I focus on the 20 different members who have asked questions. So let me address three particular points that I think are on the mind of many. One, let me just go back a little bit to inflation and what our mission is and what our mandate will deliver. Let me then say a few things about climate change, because clearly, as Commissioner McGuinness has indicated, there are multiple views. It's the beauty of this Parliament, but I would like to address specifically what we are doing, which in no way undermines the focus, the concern that we have for our primary mandate, which is price stability, and I'll come back to the links between the two. And then I would like to have the benefit of this wonderful tribune to be able to make a few comments on the relationship between fiscal policy and monetary policy and the impact that it can have on inflation and, as a result, the monetary policy decisions that we make. So, and allow me to get back to numbers and not use either fantasy numbers or to borrow from outside of Europe and the euro area in particular. So our inflation, headline inflation, which includes all components, including energy and food, was in January 8.5%, likely to be revised a little bit upward, as I have indicated, once the German numbers will be included by Eurostat. And that is way too high. There is no question about that. And I think that, if anything, we all agree upon the fact that inflation is way too high, inflation is hurting, and inflation is particularly hurting the most exposed, the most vulnerable, and the most underprivileged. That is, I think, something that brings us together on this particular issue. I would like to draw your attention to the fact that inflation is not rising at the moment. And if anything, headline inflation is declining. It was at 10.1 in November, 9.2 in December, and it is now probably a little bit north of 8.5%. That is headline inflation. What is, on the other hand, not declining, because it is stable and has remained stable from December to January, having increased a little bit from November in December, is what we call core inflation, which is all components taken into account to measure the increase of prices, except energy and food. And that level of inflation is currently 5.2%. I think it's particularly notable that we have had an increase in what we call the non-energy industrial goods inflation. And that goes to the point made by some that inflation is currently essentially attributable to energy. It is not only attributable to energy. Energy played a significant part, is continuing to play its part, and indirect energy costs are also fueling what I have called the non-energy industrial goods, as it does with services, which have slightly begun to decline a little bit, moving from 4.4 to 4.2, but it remains to be seen whether that is going to be continued. It's pretty obvious that a further weakening of demand would also contribute to lower price pressures than currently anticipated, especially over the medium term. I know Mr. Fernandez had some really interesting, important questions about the actual determination of medium term. I think that he would understand if I say that when inflation is particularly high and way too high, the medium term is probably a little bit closer than it would be if inflation was at a much more reasonable level. I think I'll leave it there because the medium term is something that obviously is going to depend on the instrument as well as the distance from which we are to target. Now, what we are seeing in the economy is price pressures that remain strong, but what has changed since our previous monetary policy meeting and the review that we have taken most recently in February is that risks to the inflation outlook have become more balanced, especially in the near term. And there are multiple factors for that. It's the decline of the high energy prices that continue to pass through to the rest of the economy, and we hope that this will move at as fast a path as it has passed through when energy prices were going up, but it remains to be seen. We have not really witnessed that yet. Fiscal energy compensatory measures temporarily dampened inflation, but, and I'll come to that in a second, could also temporarily upward the pressure in the medium term as those measures expire. I'll come back to that. Risk of a stronger pass-through of high inflation to wages cannot be ruled out. At this point in time, we are not seeing any obvious sign of an emerging self-sustained wage price spiral, but that could obviously happen and would come and fuel inflation. So we are monitoring very carefully these numbers. We're trying to be as detailed and sectorial as possible to really understand where this is heading, but it clearly could have an upward impact. Let me now touch on a little bit, and as a result of that situation, as I have indicated, our monetary policy is determined to return inflation to 2% in the medium term. And we will do so, and we will take the measures that are required in order to return inflation to 2%. This is the best service that we can provide to the economy so that economic actors understand what is the proposal in terms of prices, investors know under what terms they invest, borrowers know under what expected interest rates they borrow, and this is actually the primary objective of the ECB, and we will deliver upon it. Let me now say just a few words about another topic that has been on the mind of a few, and I will not touch on the special green rates, which is obviously an interesting topic, but not one that I can just address and resolve in this particular moment. So what I would like to do is to clarify for you, particularly for those that are concerned about us not focusing our attention on price stability and the fight against inflation. This is our fight, this is our focus, and this is where we spend our energy. But as you know, within our mandate, we have also taken decisive steps to integrate climate change considerations into our monetary policy framework, financial stability monitoring, and banking supervision. It is very clear to us that the ECB and any central bank is not in the driving seat for those measures. You are the drivers of this bus. Executive authorities are the drivers of this bus, not the European Central Bank, not any central bank. But as part of our primary mandate, which is price stability, we have to take into account the risks posed by climate change. And under our secondary objectives, as long as it is without prejudice to the primary objective, we should certainly look into what can be achieved in order to respond to what you have determined as critically important economic policies going forward. It is specifically indicated in the treaty as far as the secondary mandate of the ECB is concerned. So what have we done? We have adjusted our monetary policy corporate bond holdings, and since October 22, we have started to tilt the reinvestment towards issuers with better climate performance. That has led us to a reduction in APP reinvestment flows, and from March onwards, the program that we have to only partially reinvest is going to increase this tilting approach. By the end of 24, we will limit the share of assets issued by non-financial companies with a high carbon footprint in the collateral pool that we have. And by 26, we will introduce climate-related disclosure requirements based on the CSRD. That's on the banking, central banking side of the ECB. If you look at the supervision side of the ECB, we are working and have started the work back in 2020 with the banking sector to alert them to the process that was underway, but we're working on climate stress testing to assess the impact of climate risks on the EU economy, credit institutions, and the European balance sheets. So, some of you have expressed a concern and would like to continue to be informed of the progress of our climate action plan. So I am committed to continue to inform the European Parliament and the public about the progress that we make within our mandate, based on the primary objective, based on the secondary objective, to the extent that it does not prejudice the first. And we will continue doing that. I'm pleased to report that thanks to the energy of all members at the ECB, we are on schedule under the action plan, and we are delivering as some of you said, no other central bank is delivering at the moment. Now, a few final words on the cooperation or the good coordination between fiscal policy and monetary policy. This matters enormously. And as you know, we have repeatedly asked that the fiscal measures that have been decided at the national level be targeted, temporary, and tailored. You've heard those triple T's ad nauseum. And why is it? Because of the target of fiscal policy, which is precisely to address those that are most exposed, most vulnerable, and that take the hardest hit, particularly as a result of high energy prices. And when we say that it should be temporary, it's in order to align with the variation of the prices of energy. When we say that it should be targeted, it should be directed to those people most exposed. And when we say that it should be tailored in such a way that it actually continues to incentivize people to save energy. Now, regrettably, many of the measures that have been taken, and this is a result of an exercise that we have conducted for the first time in December, but that we will deepen for our March monetary policy meeting, only a very small proportion of the measures that have been decided by fiscal authorities actually satisfy the triple T criteria. The Bruegel Institute has most recently also issued its assessment, and I think they assessed that 25% of the measures only are targeted, temporary and tailored. And it is critically important because while those measures at the moment are likely to dampen inflation without considerations, unfortunately for many of them, for those who are most exposed, when they are withdrawn, when they are retired, then of course the retirement of those measures will actually have an inflationary impact on prices, and that is likely to take place in 24 and 25, which is the medium term that we are concerned about when we determine if and when and how we're going to reach target. So our exhortation to members of government in the euro area in particular is to really stick to that temporary, targeted and tailored principles in order to make sure that their policies does not counteract with our monetary policy and does not lead us to having to tighten even more in order to reduce inflation and reach our target. I thank you very much for your attention.
Bardzo dziękuję. Pani prezes, głos zabierze sprawozdawca, pan poseł Rasmus ANDRESEN. 2 Minuten.
Vielen Dank. Ich glaube, dass die Debatte hier heute einen ganz guten Einblick darin gegeben hat, wie kontrovers auch die Diskussionen waren, die wir zur Formulierung meines Berichts hatten im Kreis der SchattenberichterstatterInnen. Und ich möchte die Gelegenheit auch noch mal nutzen, mich bei den SchattenberichterstatterInnen auch für ihren Einsatz und für die Kompromissbereitschaft am Schluss dann auch zu danken, sodass wir hier morgen hoffentlich bei allen kontroversen Themen auch mit einem guten und mit einer stabilen Mehrheit dann auch über diesen Bericht abstimmen werden. Ich möchte auf eine Debatte noch mal ganz besonders eingehen, weil es mir fast noch die stärkere Kontroverse zu sein scheint als die Geldpolitik. Und das ist in der Tat die Frage, wie halten wir es eigentlich mit dem Klimawandel und brauchen wir eine grüne Geldpolitik oder halt eben auch nicht. Und ich glaube, wir sind uns hier im Haus alle sehr schnell einig, dass wir besorgt sind über die Inflation, über die Preissteigerungen, die vor allem Menschen mit sehr wenig Einkommen in diesen Wochen sehr, sehr hart in allen Mitgliedstaaten trifft. Aber in der Analyse, was man dagegen tun kann und wie auch aus meiner Sicht offenkundige Zusammenhänge sind zu dem Bereich der Energiepreise, zu dem Bereich der fossilen Abhängigkeit, die viele unserer Mitgliedstaaten nach wie vor von fossiler Energie haben, aber in dem Fall dann auch von russischer fossiler Energie. Da scheinen wir etwas auseinander zu liegen. Und ich bin auch der Präsidentin Lagarde sehr dankbar, dass sie letztes Jahr auch schon mehrfach deutlich gemacht haben, dass es den Zusammenhang gibt und dass Preisstabilität ohne eine grünere Geldpolitik eigentlich gar nicht mehr möglich ist. Das, was wir jetzt an fossilen Preisexplosionen sehen, sollte eigentlich das für alle offenkundig machen. Aber mir scheint es so zu sein, dass wir über diesen Punkt in den nächsten Wochen und Monaten hier im Parlament noch sehr intensiv diskutieren werden müssen. Denn es gibt, und da möchte ich Ihnen auch widersprechen, Präsidentin Lagarde, es gibt Zentralbanken, die neben den guten Sachen, die Sie auch schon auf den Weg gebracht haben, noch mehr machen. Die Zentralbank von Japan ist ein Beispiel, wo es ganz gezielt auch mit grün differenzierten Zinssätzen auch gearbeitet wird. Und ich glaube, dass wir diesen Weg auch gehen sollten und das in den nächsten Wochen weiter diskutieren müssen. Jetzt freue ich mich aber morgen erstmal auf die Abstimmung und möchte Ihnen allen bitten, dem Bericht dann am Schluss auch zuzustimmen. Vielen Dank.
Dziękuję bardzo, panie pośle. Zamykam debatę. Głosowanie odbędzie się jutro.